Hello, this is me, Desi Arnaz, and over the next few minutes I'm going to share with you guys some really cool information about real estate investing. Some of it you may know, some of it you may not, but it doesn't really matter. This video is going to be a training video. It should take only maybe 3 to 5 minutes. And my goal with this video is to help you become an expert in working with 3 basic types of investors: rehabbers, landlords, and private lenders. And I'm going to be giving you a high-level look at what it takes to be successful when working with these people. I think you're going to like it. So first, let's talk about the rehabbers. A rehabber is an investor that buys properties that need some repairs. They fix them up and then they sell them. Most of your rehabbers want to purchase properties at about 70 cents on the dollar or less, right? They don't want to pay 85, 90 cents on the dollar because they can't make a profit. They've got to leave room in there for themselves to make a profit. Most of your rehabbers will pay cash for a property and can close in 2 to 10 days. Now that's huge, and that's one of the reasons that they are able to buy properties at such really good deals, because they can move quickly. They can say to a seller, look, I know that you need to get out of here right now. If you sell to me, a week from now you're done. It's over. You can move. And there are some situations where that's really important to property sellers. Some of your rehabbers don't pay cash, but they use private money. Now private money is basically something that we're going to cover because that's our third type of lender, but basically it's money that rehabbers get from private individuals, and I'll talk a little bit more about that in a minute. And some rehabbers even use lease options. Now here's how that would work. A rehabber would tie up a piece of property by making an offer to purchase it under an option contract. In other words, they say, hey, here's a $10,000 option deposit, and we'd like to have an option to buy this $100,000 house for $70,000. We'll fix it up and take it as is. And in that situation, what happens is they give a $10,000 deposit, they move in, they send their crew in and they start repairing and fixing up the property, and then they sell it for $100,000. When they collect $100,000 from their buyer, they then pay off the $70,000 that they paid for the property, less the $10,000 deposit that they had already put up. So that's another good way for an investor to make money when they're a rehabber. Rehabbers like about a 20% cash on cash return on their investment. Now what I mean by cash on cash is this. I mean that if they put out $100,000 to buy a piece of property, they want to put $120,000 back into their account when the dust settles. Their goal is to accumulate cash. That's what rehabbers are all about, generating some cash right now. The second type of investor that I want to talk to you about is the landlord. Now landlord's goal is to accumulate wealth, and what they do is they buy properties at 85, 90, even 100% of today's market value. They're not really concerned about trying to get it at a super low price. Their goal is for long-term appreciation and growth. And so they're willing to pay a higher price for a piece of property, but at the same time they don't want a property that needs a whole bunch of work. So when you find a piece of property for a landlord, it needs to be in a little nicer neighborhood, needs to be a little nicer home. Most of your landlords are looking for about a 25% positive cash flow. Now what that means is, here's an example of how that might look. If the landlord's mortgage payment on a piece of property is $1,000, they would expect to earn about 25% more than that, or the rent would be $1,250, $250 higher than what the mortgage payment is. Now a few years back that was not realistic, but in today's market, at today's prices, with today's interest rates, that is a very realistic goal. And so if you're going to be looking for properties for landlords, you have to keep that in mind. Okay, and remember, as I said at the beginning of this conversation about landlords, they're looking to accumulate wealth, and so they want properties in areas that will appreciate quickly, because that's how they're going to build their wealth. And the third and final type of investor that we're going to talk about today is the investor that I like to call the private money lender. Now a private money lender is a lender that lends money for short term. For example, they will do a loan for you for 6 months, 8 months, a year, at the very longest 2 years. Most of your private money lenders really do want to keep it at 12 months or less. Private money lenders are looking for interest rates that are in the double digits. So you don't typically see a private money lender lending at 8% or 9%. They're going to be at 12, 14, 15, 18%, depending on the deal. But they will fund the deal. The good news about these private money lenders is they will typically fund up to 75% of the ARV, the after repair value. So what I like to do is to put these private lenders with the rehabbers that are looking for cash. So let me just give you an example of how that might look. If a rehabber has his eye on a piece of property, and after repairs that property will be worth $100,000, but he can buy it today for $60,000. But it needs about $15,000 in repairs. So what he really needs is $75,000 to buy and repair that property. If that rehabber doesn't have any of his own money, but he's got the skills to do the job, and if we can match him with a money lender, a private lender that will lend him 75%, that rehabber will be able to buy that property and get the funds to rehab it without coming out of his own pocket with one single nickel. Most of your private money lenders are people that they're just regular folks, people that have 401ks and IRAs, and they're not earning enough money on their they're not earning a high enough return, I should say, on the money that they have invested. Most of your banks today are paying what, 0.5%, 1% interest. Well, working with us, these private lenders can take their 401k, they can self-direct that money to be used on a rehab project, and they can earn themselves 15% interest during the term of that rehab. So that's a much better option for them, and then they can put the money back into their 401k when the transaction closes. So it's really a very good opportunity for them. Their goal is to earn a higher rate of return than what banks pay. Now, our role in each of these scenarios is to help these investors reach his or her goal. That's what we're all about. We provide the missing ingredient, right? With rehabbers, what do they need? They need property and they need cash. We can help them with both. We can find property, or we can match them with a private money lender, or both, right? Landlords need property, they need long-term financing, which is called a mortgage, and they need tenants. And because we are a real estate firm, we can help them with all of those needs. And your private lenders need security, guidance, and they need borrowers, people that want to borrow money and that will pay it back. We can help them once again with all of that. So what we do is we provide all of it. We're one-stop shopping for these three types of investors. So hopefully that's good information for you. If you've enjoyed this, then good. All right, what I want to see now is I want to see you take this information and let's put it into practice. Thanks a lot for your time. Thanks for participating in this particular training, and I will talk to you again soon.